Hello friends. Friends, we will continue our discussion on admission of a partner. In this chapter, we were discussing about goodwill. That goodwill is the reputation of the firm, and why we are studying goodwill in admission of a partner? Because the new partner who is going to join the firm, he will enjoy the reputation that has been earned by the old partners. He must compensate for that by paying premium for goodwill. Now, there are various cases in which this premium for goodwill can be paid by the new partner. One was privately, then no record in the books. Second was cash and retained in business. Right? Third was brought in kind. Kind means asset. Next was brought in cash and withdrawn by old partners from business. Right? You can refer to the previous lectures regarding these various cases. Now I move on to the fifth case. The fifth case is that the new partner brings only a part of premium. New partner is able to bring only a part of his share of premium. For example, his share for premium is 30,000. He brings 18,000 only, and 12,000 is still pending. This 12,000 we have to recover from the new partner only, because the old partners are to be compensated with 30,000. Therefore, this 12,000 the new partner will bring, but currently he is bringing only 18,000. So how to treat this? Let's see. The first entry will be for the receipt of premium. Whatever premium he has received, he has brought in, we'll record that. We'll say bank account debit to premium for goodwill. What is the amount that he has brought in the business? Is 18,000. Now, as we have discussed that this premium is to be adjusted through partners' capital accounts. So the entry for that is premium for goodwill account debit to old partners capital account. Now what is the premium for goodwill that he has brought? 18,000. But the old partners are to be compensated with not 18,000. They are to be compensated with 30,000. Now what to do with the remaining 12,000? How to treat that remaining 12,000? See, that remaining 12,000 is to be recovered ultimately from the new partner only, because the old partners must get their share of 30,000. So what we will do is we will debit the new partner's capital account. He becomes our debtor. We have to recover that amount of 12,000 from the new partner. I'll say new partner's capital account debit 12,000. The old partners must be compensated with 30,000 and not only 18,000. Sorry. This 12,000 we will ultimately recover from the new partner only. Clear? So this is the case when the new partner brings only a part of his premium for goodwill. we will debit the new partner's capital or the current account with the amount that is pending, the amount that has not been brought by the new partner. Clear? Now let's see a practical problem on this. A and B are partners sharing profits and losses in the ratio of 3:2. They admit C into the firm for 1/4 share in profits, which he takes 1/6 from A and 1/12 from B. C brings 18,000 as goodwill out of his share of 30,000. No goodwill account appears in the books of the firm. Pass the necessary journal entries to record this arrangement. Let's see. Let's first of all write down the facts. There are two partners, A and B. They are sharing profits in the ratio of 3:2. New partner C is admitted for 1/4 share. He is taking this 1/4 share, 1/6 from A and 1/12 from B. Right? Now I told you that the first step is to calculate sacrificing ratio. What is A's sacrifice in this case? It is very clearly given. A's sacrifice is, out of the 1/4 share of C, he is taking 1/6 from A. This comes to 1/24. What is B's sacrifice? Out of this 1/4, 1/12 he is gaining from B. This comes to 1/48. So what is going to be the sacrificing ratio? 1/24 is to 1/48. This I can say as 2:1. This is going to be our sacrificing ratio. Now the question says, what is the share of C for premium? 30,000. Out of this 30,000, he is bringing only 18,000. What will be the journal entry? First of all, journal entry for receipt of premium. I'll say bank account debit to premium for goodwill account. How much is the amount that he has brought? 18,000 out of 30,000. Now this premium for goodwill is to be adjusted through partners capital accounts. I'll say premium for goodwill account debit. Who are the old partners? A and B. To A's capital account and to B's capital account. Now what is left? This premium for goodwill is 18,000, but the old partners must be getting a total of 30,000. Now how to make that 30,000? What to do with the remaining 12,000? We will debit the new partner's capital account, that is C's capital account debit with 12,000. Now the total is 30,000. This 30,000 will be distributed among the old partners in which ratio? In sacrificing ratio. What is the sacrificing ratio? 2:1. Clear? What is the sacrificing ratio? 2:1. So this 30,000 we will divide in the ratio of 2:1, which will come to 20,000 and 10,000. So this is how we are going to treat when the new partner brings only a part of premium for goodwill. Now similar to this is the next case. This is case number 4. Let's see case number 5. Very similar, very simple. That new partner is not able to bring his share of goodwill. The case 4 was that he brings only a part of his share of goodwill. Case 5 says he is not bringing anything. Very clearly, the case 6, that was case 5, this is case 6, right? Case 6 says that he is not bringing anything as his share for goodwill. Now, what to do? Very, very simple. There is no entry for bank to premium. Will there be any entry? Bank account debit to premium for goodwill. What will be the amount? Nothing, because he is not bringing anything. How can we pass this entry? There is no money coming into the bank. There is no cash. So there will be no entry. But ultimately, this amount has to be recovered from the new partner only. Right? Now, what will I do? I'll simply pass a journal entry that the new partner's capital account debit to old partners. See, the old partners are sacrificing their share of profit. They must be compensated. There is no excuse for that. Right? This amount of goodwill, premium for goodwill, we have to ultimately recover from the new partner only. If he is not able to bring at this moment, at the time of admission, he is not able to bring, but we have to recover it. So we will debit the new partner's capital account. We will show him as our debtor from whom we have to recover the amount. Right? Say for in the above example, we say that this 30,000 amount of premium for goodwill he is not able to bring. He is bringing 0. So what will be the journal entry? New partner. New partner is C. What will be the journal entry? I'll say C's capital account debit. What is the amount? 30,000. And to old partners, to A's capital and to B's capital account. In which ratio? Again in sacrificing ratio, because the old partners will be compensated in sacrificing ratio only. Right? So this amount will come to 20,000 and 10,000. So this is one case where the new partner is not able to bring his share of goodwill. He is bringing nothing. So we will straight away debit the new partner's capital account. He will stand as the debtor to the old partners because he has to compensate the old partners in any case. Right? If he is not able to bring the amount at this moment, we will recover it afterwards. So we will debit the new partner's capital account and the old partner's capital accounts will be credited in sacrificing ratio. Right? So friends, these were the various cases in which premium for goodwill can be brought in by the new partner. Right? Now in the next lecture, this is all for this lecture. In the next lecture, we'll be discussing one small topic on hidden or inferred goodwill. What it means that sometimes in the question we will not be directly given the reference to goodwill, right? But there is some goodwill hidden. Will be said that he brings in this amount as capital, right? But there will be some part of the goodwill in that amount that he brings. We have to find out that. That is hidden or inferred goodwill. That is we are going to discuss in the next lecture. That's it for today's lecture. Thank you, friends.